Hello, everyone, and welcome to the Open Equine Market Commentary for the week of May 14th. My name is Toby Gennaro, and we're just going to be taking a look at an update on the U.S. indices, and then we'll take a look at some foreign currencies and potentially some commodities for the upcoming week. And what I have up are just some of the higher time frames on the ES, the S&P 500. And so we'll take a look at some of these futures contracts and see where the market's going here for the next week. Looking at this first level that we have in here right at 1340, we just got to break down through this just slightly here within the last 24 hours. And what we were looking at last week, if you recall, was this candle right here. And we were looking for the breakup or the close last week of what that candle was going to be. And so we got that close right in here amongst the 10 and 20 period moving average. So remember, when we have all the moving averages that are fanning up in the correct order, we've had a long established trend here. We're looking to essentially buy pullbacks and stay long this market. But a couple things have changed here. We actually had a lower high put in here on the ES, and we actually have a lower low put in last week, which actually gives us a formal trend reversal. So in order to get long, what we'd be looking for this week is a close of this candle above the high of this candle, which would be right about above the high of 1370. So once we get this candle closed out above the high of 1370, we could look to start finding some long signals to take this back up for about a 1-to-1 in terms of a reward to risk scenario, which should probably take us right back up into that 1400 level. And then we'd have to wait and see what the market's going to do. If we're going to put in another lower high in the market, then more than likely we'd be looking to come back down and retest this potential low down here at 1330, or essentially put in another low. So that's kind of what things are looking like on the weekly chart. If we go in and put in a Fibonacci retracement right here at this level from that most recent low quite some time ago to the most recent high, we can see that a pullback based off of this trend reversal coming right back into right around that 1270 range. It's pulling back right to the 50 and the 62% level. We've got a nice support level right in there around 1270, 1260 that would not be unreasonable for the market to pull back. These pullbacks we had a nice pullback right here, and we're able to push higher. The market's got to pull back at times and consolidate, even though we're having a lot of bad news around the Greece situation, European countries, and even some of the trading losses over J.P. Morgan have kind of shocked the markets. So even in light of some of those news headlines giving people reasons to sell off this market going into the summer, but just keep in mind some of these key levels and keep in mind the higher time frame charts, and that we're still in a very strong uptrend. We're just looking to figure out how big of a pullback this is going to be in the markets. As we move over and take a look at the daily chart, we can see that a little better. We can see that lower high in place, and we can see the lower low in place, which has now changed from what we were doing before. It's just putting in higher highs and higher lows. So we have the daily chart. The moving averages are rolled over. They're in order to the downside. We can see that even more on the 480 chart and the 240. And so as you can see, any rallies back up into the moving averages in and amongst that 10 and 20 period moving average are going to be met with some resistance, both in terms of price resistance levels right at that 1345, 1350 level. And you can see that even a little better on the 240 chart. So you're going to be wanting to look for those trend flow trades, potentially to the short side as those candles set up in the zone. We do have some divergence on some of these time frames like the 240 and the 120, which means we have a lower low in the price action, but we have a higher low in the underlying indicators, which tells us that the trend here might be weakening and we might be getting a bounce. But as you can see, that any bounces are more than likely going to be capped somewhere here, maybe at this 1360 level or somewhere in between this range. So we have a lot of price resistance to get through here on the S&P. Let's take a look at the YM and see what's different or what's the same. So in looking at the YM, I have that same Fibonacci retracement in place and that same retracement level coming back to within that 50, 62% level. So very similar to the ES. we have a good solid level there, just like we did on the ES as well, right around that 12,000 level. And even more so, we have a pronounced reversal pattern that's setting up here on the YM, and we have a level here where we're pretty much on the third touch, right around that 12,660 level. And so if we end up getting a break at that 12,660 level, we do have some support down here at 560. But more than likely, if we break that level to kind of relieve this reversal pattern here, we'd be looking for that pullback really all the way back into that 12,000 level. That's kind of what it's looking like. So you can see that that pattern setting up even better on the daily chart, and then you can see that level of 12,650. We're on the third touch there. So we might get a bounce back up into the moving averages and then potentially start to look for that rollover coming back to the downside. So as you can see this on the 480, very similar. Any rallies are going to be right back into that sell zone on the 480 chart, right back into the 10 and 20 period moving average. Same exact thing on the 240. And then you can start to see where some of those price resistance levels come into play right around 12,750 up into 12,800. Okay, so that's what the indices look like. Things are looking fairly bearish. The news that's been coming out, headlines have been affecting the market quite a bit. And looking at the euro currency futures, we're looking at the weekly chart here, and we can see that there's a fairly nice downtrend here on the euro, and we have all our moving averages in alignment to the downside, or at least getting into alignment again on the downside after this bounce. And as we move over to the daily chart, we can see this level coming in right here around 1.3, and so we've actually been struggling at this level at 1.3. We made several touches along there, and we've put in consistent lower highs, and then we finally just got a breakdown through there. So we'll be looking really for any rally back up into this 1.3 level, and then to continue to get short this downtrend. You can see that pretty well on the 480 chart where that level comes into play. So any pullback is going to be right back within the sell zone. We start to look for those setup candles, and then look for that 1.3 level to start to play that back down on the short side, and then you can see that fairly well on the 240 as well. So good setup there, nice trend on the euro currency futures. Moving on to look at silver. Silver's got one of the better trends in the markets right now as well, to the downside. As we look at the weekly chart here, we've got obviously we can see the lower highs in place, the lower lows, and then we're rolling over again right here after we had that nice trend flow set up to the downside. We got the moving averages rolled over in order, and it looks like we're heading down to this 26 level. So as we can see on the daily chart, nice consistent selling pressure to the downside. All the moving averages look good. The price action looks very predictable. On the 480, same thing, and what we're looking for is any pullback into these moving averages up at some of these levels, like around 29.7, 29.8. Start to look for those trend flow candle setups in the sell zone, in and amongst that 10 and 20 period moving average. Same thing here on the 240 chart. So if any of you folks have not been to some of the advanced courses that we're doing with OpenECRI and some of the other webinars where we're actually introducing some of these trade strategies, that's essentially what we're talking about. This is actually a trade strategy setup. So we're teaching actually two basically trend following strategies. So if you want to learn some of these to understand a little better what we're talking about here and how to look for these setups yourself, check the OpenECRI website, and you can find out a little bit more information on how to get involved in those. And we'll show you exactly what we do in terms of identifying some of these setups. But very good setup here on silver, just looking for those pullbacks and then looking to get short silver into that, back down into that 26 level. And also look at platinum. There's a very similar trend to the downside, similar to silver. So you can look for the same rallies and the same short setups as on silver. So that's basically the outlook for the U.S. Indices, the euro currency, and a couple of commodities for you for this week. And again, take a look at the OpenECry website to get up to speed on some of the trade setups and the trade strategies that we're using, and get signed up for the webinars if you like, if that interests you, and we can help you put some of these trading strategies into your plan. Okay, so I hope that helps, and we'll see you next week on the update.